Hi, Richard Hemming here from Under the Radar Report. I'm with Under the Radar's mining analyst, Peter Chilton. Hi, Peter.
Hi, Richard.
We had such a great response from our nuclear analysis the other week. We're definitely going to be coming back with more nuclear analysis. But what we've also been asked about is lithium and, whether there's a buying opportunity in lithium, because that is also a critical mineral and has also experienced a lot of volatility. So I guess the first question, Peter, is, the lithium price sort of in the doldrums, but lithium stocks, starting to bounce. Is that bounce going to continue? Are lithium stocks a buy?
Well, the better ones, yes, I think they are the better ones. I think it will continue. Markets always look ahead, perhaps 12 months ahead.
Yeah.
And what we're seeing in some Australian stocks and certainly some North American stocks is stocks moving up. And a lot of that is being driven by very evident strong demand for lithium. Despite the fact the lithium price has gone down and stocks have gone down, demand has continued to rise very strongly. And we've seen very strong evidence of strong demand for new vehicles, EVs, around the world, but particularly in China and Europe. And we're seeing very strong demand for use of lithium in batteries.
So what's holding the price back?
The reason the price is being held back is primarily due to a lot of stocks in the system inventory.
A lot of inventory.
Inventory, right from the mine right through to the car manufacturing plants.
So that's being run down in the system?
Well, one assumes it will be, but it's at the moment the market's not that transparent. So it's difficult to pinpoint exactly when it will be run down, but certainly it's inevitable that it will be.
Yeah, so I guess in terms of the demand scenario, where are we at the moment and where are we projected to go in terms of lithium?
Well, we're just at the beginning, really. The market penetration of motor vehicles is still fairly low. We've got annual production or annual demand of lithium for about 1.5 million tons a year. By 2030, 5 years away, it could be almost 3 million tons. And then further out...
So 3 million tons, so more than doubling.
More than doubling over the next, say, 5 years.
Right.
And then maybe up to 4 million tons in another 5 years' time. So...
And you've been talking to a lot of the lithium producers recently, and having delivered their quarterlies. What are some takeouts from that?
Well, universally, demand's very strong. Very strong, and they think the low prices that we're seeing are not sustainable. Another point I would make, of course, is that the companies I've been speaking to, it's been a long lead time to get new production going. From getting permitting to actually getting into production. So if you want new production in the future, how long is that going to take? It's going to take years.
And at current prices, are they profitable, these companies?
They're just cash positive, making cash profits, but not actually profitable at the bottom line. So they're working hard to keep their costs down so they can continue to make that cash profit.
Okay, so before we get onto the stocks, let's just talk quickly. 3 bull points. What are 3 bull points in the lithium sector?
Certainly demand. Demand is the big thing. I guess the second thing is China, because they've been leading the lithium, growth.
So they're a big percentage of lithium purchasing, are they?
Well, they're say 60% of EVs around, or 40% of EVs around the world, but 60% of the growth this year. So that's how significant they are. And they're also leading
driver, right?
Yeah, they're the big driver.
They build your dreams.
Exactly.
And then there's probably 100 other cars behind that.
Yeah. And I suppose the third point is people just aren't factoring in.
Yeah, right. The valuations.
The valuations. A lot of people have almost written lithium off because the prices of equities are right down. They assume that lithium demand has just collapsed, which of course is the opposite.
Well, it's not collapsing at all, but
no,
the price is still in the doldrums.
Yeah.
So what would be the biggest risk, therefore? Demand's going gangbusters, supply we're not sure about. What's the biggest risk factor for, investing in lithium stocks at the moment?
Well, I suppose the biggest risk is they're not very profitable at the moment, So they've got to be careful with their cash flow.
Right.
Another risk would be that supposing these downturns protracted, so that's a bit of risk.
That's
longevity
of risk.
Yeah.
What about in terms of disruption? Could there be disruption to lithium?
You're asking the question: is there risk that it could be
an alternative.
an alternative.
Things like
I think the thing about lithium is the very high energy intensity per weight,
right.
which really, despite everything, lithium has remained at the top of all the alternatives.
Yeah.
There's always a few alternatives that crop up, but only they're often can only be used for limited applications.
Yeah.
The good thing about lithium is it actually can be used for mobile vehicles where you need a battery to be compact and low weight.
So there you go. We're getting more bang for our buck out of lithium.
Yeah.
And I guess, like, before we get onto the stocks, which I think are really interesting because we've had an upgrade, I think it's important to recognize just where lithium can play in your portfolio. I mean, honestly, Peter, you did such a good job picking Pilbara Minerals back there in 2017 at something like 75 cents. Well, the stock actually rallied over, in late 2022 and 23 to over $5. So that's a huge gain. But I think what's important is when you're doubling your money in these highly speculative sort of stocks, you do take your profits. So you take your costs out. So that's what we emphasize for our members, is that to take the risk off the table by taking some profits, and then you're playing with house money. That's one thing we always emphasize to our members. Now, Pilbara Minerals is $1.30, I think. Or
around $1.30. Yep.
And Peter's upgraded from hold to spec buy. We've been on hold while we've seen some of this downturn. Why are we upgrading Pilbara Minerals, which is very much the flagship in the Australian listed sector?
Well, I mean, what they've done is to close one of their plants down temporarily to minimize their costs.
Right.
Just in this intervening period.
And so this is a rock lithium in what?
This is hard rock in West Australia.
Yeah.
I mean, the appealing thing about Pilbara Minerals versus just about any other lithium stock is the fact that because they're potential global scale, they can basically treble their production from here.
Right, and they've got a lot of excess.
And that's just in Australia, and they've just made an acquisition in Brazil, which is a major hard rock deposit there.
Yeah.
So there's a lot of growth within Pilbara. It's well managed. It's a strong financial position considering everything.
Their costs are they?
Well, their costs
of the sector.
Well, the sector is still quite a young sector, but their costs are below current lithium prices.
So
and lithium prices have just increased slightly in their last quarter.
Yes, and that's been evident with some of the balances we're seeing in Pilbara's share price.
It is, yes. Yeah.
But even though we've seen that bounce, you're saying we still like it?
I like it. I mean, it's just a well-run company. It's already built the capacity. Most of the capital has been spent. It's just really, and it's producing.
Yeah.
It's got strong customer orders. It's got very strong demand.
So the likes of cattle on their customer.
Yeah, exactly.
Biggest, his factory maker in the world. It doesn't get a better customer than that. And what about another one that you've been looking
Liontown,
at recently, Liontown? Where do you position?
Well,
what do you think about them?
I like
their earlier stage.
We've put a hold on Liontown. I do like Liontown. Just listening to the conference call, you just realise the strong competence of their management.
Right. So they sound pretty.
And their enthusiasm, and they're experiencing very strong demand. They could sell more if they could produce it.
So are they Australian producers?
Yeah, they're also in WA.
Also, they're hard rock.
Hard rock, yeah. As they're ramping up, they're cash flow positive, but they're still not profitable yet.
Right.
I suppose the only reason I've got
They do have debt, don't they?
The reason I have a bit of caution is they do have debt, and they've got some scheduled debt repayments next year.
Yep.
Which you'd think will place them at a risk. I think in practice what will happen, most of the organisations they're borrowing from are actually their customers, their future customers, their off-takers.
Okay,
like Ford Motor Company. And we know at the moment they're not paying the interest because they don't pay interest until the offtake agreements cut in, so you're actually supplying them. So the company just say on the conference call that we're talking to our customers, making sure they're up to date. So I think they will forgive debt repayments until they get their supply. But I mean, that's just my view. So there's a bit of risk there.
And recently we have had quite a few reports on commodities, namely gas, nuclear, and now lithium. And Peter, if you were to choose out of lithium or nuclear, because I know you like Paladin, I know you like Pilbara Minerals, but would you say that nuclear is lower risk than lithium? Like if you were to, because not everyone can invest in everything. or even both sectors.
Yes.
Which of those industries would you prefer to be invested in?
I would say, for the time being, probably nuclear,
Right.
because I try to follow it fairly closely, and it seems like almost, well, probably not every day, but every week there's a new positive development somewhere. It's some announcement talking about a new. I was just reading just the other day about a definite plan to build an SMR, a small modular reactor, a definite plan.
Okay.
And there's another country, I just can't remember which one it was, that's now agreed that it's not the uranium plants, the nuclear plants is mothballed, are going to be reopened. So you're seeing this sort of positive news all the time.
Well, there you go. There's lots of positive news on nuclear, and there's also, positive news, or there's been consistently positive news on gold. Although, having said that, the gold price has wavered a bit, and Peter has been behind a recent gold report coming out next week. So that's to look forward to. As well, we've got our dividend portfolio management series and our dividend portfolios coming up. So there is lots to look forward to at Under the Radar Report. Thank you for joining us, and we'll look forward to talking to Peter again soon.
Thank you.
Okay, thanks.